A jumbo mortgage is a mortgage that exceeds the maximum loan amount allowed by Fannie Mae and Freddie Mac. The maximum loan size for a single-family residence backed by Fannie Mae or Freddie Mac increased to $424,100, with a few exceptions in certain high-cost areas throughout the country. This means that if your loan amount exceeds this amount in most parts of the United States, you will need a jumbo mortgage. The maximum loan limit is subject to annual revision. Since Fannie Mae and Freddie Mac do not securitize jumbo mortgages, there is no general set of minimum guidelines for a jumbo mortgage as there is for a conforming conventional mortgage. Because of this, mortgage terms and guidelines vary greatly on jumbo mortgages. Generally, minimum credit score requirements are higher for a jumbo mortgage, and down payment requirements are also higher compared to their conforming counterparts. Independent lending institutions make their own rules for jumbo mortgages that they either hold or sell into securities, and because no two investors have the same requirements, the borrower will notice the difference in the interest rate they're quoted for the jumbo mortgage. While some investors may seek very high credit scores and low debt ratios, others may be more lenient. Because guidelines do vary so much, PrimeLending offers jumbo loans from several different investors. Many people mistakenly think that jumbo mortgages should have lower interest rates or be easier to qualify due to higher borrower incomes and higher down payments compared to their conforming counterparts. The underwriting process for a jumbo mortgage is really no different than a conforming mortgage, and in many cases it can be more difficult. For example, many jumbo investors require 2 appraisals once a sales price meets or exceeds a threshold they set. This threshold may vary from investor to investor. Interest rates for jumbo mortgages, especially as loan sizes increase, can also be higher regardless of borrower quality. If you're purchasing a $1 million home and you put 20% down, the lender provides a loan to you for $800,000. Now that same lender could make 5 loans to borrowers who are buying $200,000 homes and putting 20% down. And even if 3 of those 5 loans went bad, the lender would still have much less money at risk while still having a significantly larger market of people who could quickly repurchase a home in that lower price range. The length of time that it takes to process a jumbo mortgage may also take longer compared to a conforming loan. Some jumbo investors will delegate underwriting authority to your lender, allowing them to underwrite your mortgage just as they would any other. But many do not delegate this authority, and the investor prefers to underwrite the loan themselves. In these cases, your lender does not retain control of the underwriting process. Therefore, the borrower may experience delays beyond control of their lender. Some investors also require a secondary underwriting review and or a secondary appraisal review, especially for larger loan sizes that can create delays compared to a conforming loan. Your PrimeLending loan officer will set proper expectations when it comes to your jumbo mortgage. Options may include a delegated versus non-delegated underwriting option, among many others based upon your specific loan requirements, your credit, income, down payment, and more.